learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, it's okay. Let it out. It's okay. Let it out, Chad. This is your moment right now. The NASDAQ is down 27%. Google is down 25%. Amazon is down 42%. Netflix is down 75%. This is the 6th week of weekly declines. If we end lower, that's the longest streak from like 2011. What else was there? There's a bunch of it, man. Today was absolutely crazy. We were talking about capitulation. We had a lot of digestion from Powell last week, but today was absolutely insane, and it didn't really feel as bad as some of the other days, but I'm pretty sure people felt that, oh yeah, that was the other one. Today's the 5th largest retail selling on record. The only other time was September 2020. But ladies and gentlemen, market is crazy. We have a lot to talk about. We have a big range, and really, that's what I'm going to talk about. I'm going to call it the F it zone, because if we break below here, it starts to get a little bit precarious. So I got a couple of signals. I want to go over that. We're definitely going to go over what happened today. A lot of different things happened, and you need to know what it was, because it affected a lot of different industries. It wasn't just tech and rates today. Like energy got clapped. It was all bad, but we're going to go over all that, and then we're going to talk about really what we expect for the rest of this week and what could happen from here. Best case and worst case scenario. So I hope you're ready, but drop your thumbs up on the video. Make sure you're subscribed, and hopefully we see you on stream. YouTube.com/TheStockMarket. Now, where do we start? I'm excited, but where do we start? We got to talk about why we went down today. So Friday, remember, it wasn't really the best day, but it wasn't big. It was Thursday last week that was a little bit more scarier, but then what happened today? Well, we woke up with 3 different news events. We were already near the lows, and literally we gapped down to a new low. By pre-market, we were already hitting 402. Remember, 405, that was the low from last week, but we opened up there at like 402 or opened up a little higher. Eventually came down, and now what were the things that drove us down? One, Europe, they started to back away from some of the energy ban stuff they were talking last week. It just seemed like a lot of confusion, and it overall wasn't good. And remember, last week they were just talking about a recession and what happens if they have rates go up, and they're expecting 10% inflation, but that was the first piece of news. Then China, the yuan weakened by a ton, and they said they're expecting the lockdowns and even slow economic activity from the lockdowns to persist. And well, that one wasn't good, and that affected oil a lot. Again, one big thing about today, remember yesterday, I was thinking energy was going to do good. I said, if anything, energy would be able to distort the market this week, especially with the CPI, but they got the hook, the uppercut. It was bad, man. It was down 8%. So energy, that was bad there off of the China news. Again, China staying locked down, less demand, that wasn't good. And then on top of it, the Saudis, they lowered the price to selling oil to China. So all of that there, you got a couple of Fed speakers. It didn't move much, but those 3 things, those really started to move the market. It brought energy down. And then after hitting the lows, we literally just a controlled VWAP sell-off. And if you haven't seen our video on VWAP, I would definitely watch that, because what we're seeing today, I mean, a lot of it really looks like that, in the sense where people use VWAP for big purchases, big sales, to not disrupt the price, and literally we just saw that all day. But that was the big driver. After we started hitting lows, that's where things got a little bit more interesting. It happened very slow, but now here is the thesis I want to talk to you about. It's really, what are the next levels and where do we go from then? Why was today so big? There was a lot of things. One, retail was selling. There was a lot of capitulation. I mean, a lot of names, from Nvidia down to Airbnb, just even AMD was down, or I think they were down like 6 or 7, but it's just like so many individual names really did sell off today, and it was very, very bad. But this was like capitulation, where everything, that correlation was so high. And that's what makes it interesting now, is because we have came back to the same levels of last year. The S&P is at a 13-month low right now, and literally our next support level goes all the way back here to March, in the end of March of 2021. So this is the next big thing. I think a lot depends on CPI this week. A lot of people are kind of bullish about it, and some people say that's the negative part. So we're going to see, again, most rallies have been sold off, and that will be the worry. But the fact is, we are now back to this level. And if you remember March, April, there was a lot of volatility last year. That was people freaking out about inflation and all of that. But I mean, the rates in the Fed, it just was not like this. But now that point that we're going to be at, this is the next key. This is really, I think, the biggest thing from here, because depending on if we kind of bottom out here and set a level, that would be good. But if we start breaking below here, it starts to look like we're about to give up the 2021 gains. And that's what I'm saying with capitulation. A lot of industries, from SPACs all the way down to non-profitable tech, they're already back to 2020 levels. So not the S&P still holding up above 2021, but certain industries are already at pre-pandemic, pre-COVID, whatever you want to call it. And that's what's crazy about it. But pretty much where we go from here, this is what I'm calling the F-it zone. If we pretty much break below 385, that's what's going to pretty much take us down to a straight route to like 370. It's around here again. That was the volatility at the beginning of the year in 2021. But essentially now we're at like the top of this range here from the middle of March. That's when it first hit like 399, or right below 400. And then it went as low to like 385 right there. So pretty much we saw this at the beginning of the year. You guys remember that like 420 to like 400 level? I pretty much think now we are at the top of this range, and depending on what CPI does, the question is, do we go lower than 385? If CPI makes it where we break it, I mean, essentially, I think the next stop will be right smack in the middle, like 375, even down to 360 with everything at the beginning of last year. But if we are able to hold, it might create a new range until we get Powell and buy us some time for the next 3 weeks. So hopefully that makes sense for it. Again, there's a lot of things going on. Everybody is tripping out, whether it is retail all the way down to institutional. I'm telling you, this is probably peak volatility, and this is beyond volatility, because it is a slow drawdown. You are witnessing it. People are responding to data. Even the banks are mentioning it. Literally, Bank of America, they're even now pointing to the soft data, like the amount of weak demand mentions, or even business sentiment and all of that. But the point is now, people are like, well, wait a minute. We've been like this for 6 months. A lot of industries have been picked apart. Some names are already down like this. Now it's just starting to turn to a volatility that a lot of us haven't seen in a while or dealt with. So where we go from here, it's going to be interesting, and we can have a lot of ups and downs, but pretty much what I'm going to be looking for, the levels, the catalysts, and the data. So we need to see which levels we trade out. Again, that will give us an idea of, investor sentiment. Then we want to see any of the news, like those 3 things there that we got this morning. If any of those develop, I mean, there is things that can surprise. Essentially, I think the lower we go, even coming into June, depending on how things play out, I mean, don't kid yourself. You may hear from Powell and the Fed, and that's why tomorrow's going to be key. Tomorrow, you got 5 Fed speakers. This may be able to change a lot of the trajectory, or it can make things worse. And then finally, you just need the pure data, the CPI, inflation, the rates, what the Fed is going to do. I factor that in the data, and those will be the big drivers. But it is getting interesting. There is a lot we have to deal with, but let us get into the play. So, right off the bat, I made a couple of crazy plays today. Why? I bought some of the dip. I know buy the dip sounds like hate speech nowadays. I know it's just, I know people don't like that. I get it. I understand. But I added to the long term. I went negative on the long term today. I know, bro. The good old, it's been years, bro. It's been years since we started it. Today, it went like negative 1% on the big one, and then like 0.8 on the YouTube account, and then sister's account. I mean, she started late. It's okay. It's a good time to start now, but I still added to it. I grabbed Airbnb and Uber. I had the deposit from this month. I split it up 50-50, bought 10 Airbnb, 50 Uber on the big account, and then on the small accounts, 1 Airbnb, 2 Ubers, and that was pretty much it. And then I bought a January 2024 Airbnb Leap. I spent $3,600 for the 125. I thought I'd get, again, We've never been at, today was the cheapest purchase on Airbnb. So I like it. And here's my logic. Why am I adding to the long term? We've waited. We've added some stuff. I mean, imagine what it took to finally go negative. The way I'm looking at it, I could deal with anything if it goes down. I mean, I'm not going to touch this thing for 10 years, but the way I'm looking at it, I do think we could see more downside. Even if we flush like 2018, it would probably be another 10, 12% down. And at that point, I mean, the numbers on the index, like literally NASDAQ would be like down 40% almost. So it'd be pretty wild at that point. But what I'm thinking is that even if I go down 20, 30% on even Airbnb, Uber, some of them, I'm pretty much thinking with another deposit, I mean, it will balance out for the most part. And I think there's just more upside than downside. And even if there is, I'm willing to ride it out if it is some of these companies. So that's the only other plays that I made today. Let me double check. I did do another SPY daily. I grabbed a 436 in the morning, 40 cents, only kept it small this time. Again, I was going to kind of play into it like I did Friday, but I just wasn't really seeing it with how slow it was moving, and the premiums were already expensive. Ended up getting clapped. The max we were up on that play was 50%, but keeping it small. And again, I'm throwing out my feelers until I see something. I mean, I think you guys will see it eventually, but that was the first play. I did take profits on a couple of other ones besides, doing the long-term stuff. Sold out of the Hershey's and the old Apple Hershey's. We got like 100%, sold out at 224. The other Apple from earnings was up 50%, small play. Got out of that one. Then I did do calls for the end of the week. Again, I'm thinking CPI could be bullish. Anything could happen, man. Again, I don't know. I said this on stream today, and I don't know if I could even tell it there too, but I grabbed the calls. I grabbed 423s, bought two of them, 50 cents a pop. But I was saying this today. Everything that could happen, whether it's stocks, real estate, I say it all humbly, okay? I'm telling you this now because it's like we've already witnessed so many unprecedented historical things. It's like, yo, I think it's pretty clear anything could happen. However, on the good side, it's like, yeah, you have a strategy. We have history. We've gone about and we've seen a lot too. So it's like, okay, I do have an expectation, but anything could happen. So like I'm saying, humbly on anything, we could get a bounce. We may not. You have to be very nimble and you have to make sure you got money for the next move and go little by little. Again, that's why you're seeing I'm still keeping these kind of small, even on any of these SPY plays. But what I'm trying to say is anything could really happen in this environment. But those were the only other plays. I didn't grab the Kinder Morgan. It was a random play, but I do want it. But premiums didn't drop a lot today, and I kind of like it. I'm still bullish on oil. It may happen towards the end of the week, maybe in the next week. But again, bro, oil materials, they got clapped today. But oil premiums didn't go down too much. Some of them only dropped like 10, 20%, and the whole industry was down 8%. So could be the volatility, but I was going to get KMI, but it was still only down 11%, I think, on December or January contracts. I was like, nah, I'll wait a little bit, but I do like that one. I lost $1,200 on the future. I didn't sell out of it. I'm still holding it, but that one wasn't pretty, and I pretty much think that's it besides everything else. I mean, I'm not going to be watching anything too crazy. If we do get any signals from the Fed tomorrow, if it can affect banks and even some of those real estate stocks, that would be good. Or in general, if it could get us some excitement and CPI is good, I mean, I feel like after 6 weeks historically, I don't know if it's going to set that record this week, but we will see what happens. I hope you're ready. Do not capitulate. And man, that is your watch list, ladies and gentlemen. Make sure Andre Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, this is the catfish. You need to let it bring it out of you. I started getting into it. I didn't want to get too ahead of myself, baby. This is it. It's either going to bring out greatness out of you or it's going to bring you to quit. Which one? Which one? You pick, baby. So it's game time, but I'm going to see you in the morning and I'll see you. Stay hydrated. Let's go, baby. Let's go. You ain't quitting, baby. Let's go. You're going to balance it. And then the therapist, don't take it that seriously, okay? You're going to calm down, have a budget. It'll be good. This is just a speed bump. Speed bumps slow you down, but you keep the motion, okay? This is probably the weirdest ending, but that's goodbye. Amen. Namaste. God good.